Hey guys, in this video, I'm going to be covering the sessions high-low indicator. I'll be explaining why is it important, how I use it, and how you guys can use it to your advantage. So basically what this indicator does is it automatically plots the previous session highs and previous session lows on the chart for you, helping you identify critical price points where price is likely to be manipulated. As you guys can see right here, we have a purple horizontal line, a red horizontal line, another purple horizontal line, and a green one down here. Looking over here on the right side, you can see that this says Asia high. So this was the Asia session high. Right here is the London low, Asia low, and New York low, right? So what happens is when you turn this indicator on, it will automatically populate the previous session's high and previous session low for each specific session. The way that you can use this, or the way that I personally use it, is that I use it to avoid trades, specifically trades that are going to be highly manipulated. So for example, if I was taking a sell right here, you can see as soon as price reached this point, it bounced directly off that purple line, right? Which was the Asia high. So if I was looking for a sell at this point, if my entry was somewhere around here, I would have just avoided this trade because I would have hated to have gone caught in this fake out right here, right? The problem with these price points is that you don't really know where price is going to go once price reaches it, right? So for example, here price came down, bounced directly off it, right? Again, right here, price tested it, but when it tested it, it faked out, swung right back up, faked out again right there, and then continued right back below, right? And then it did it again at the London low right here. This whole area is just a bunch of consolidation, lots of manipulation going on. And then again down here at the New York high. So as you guys can see, the way that I personally use it is if I'm taking a trade, I would just avoid a trade if my entry was near one of these sessions, or if price was having to reach that point to reach my TP. So for example, if I was taking a sell right here, I would either take my TP before the session, or I would just wouldn't have taken the trade, because I would hate to have taken this trade here and then all of a sudden price swings up and then stops me out because it fakes me out, right? So that's the way that I personally use it. There's a lot of different other ways to use it. One way that you can use it if you want to trade this with regards to your type of trading style is you can use this as possible rejection points, right? So like, for example, here, when price reached this point, you could have scalped a quick move off the bounce, right? Depending on how big of a move you're looking for, maybe like 100 pips or so. And that'd be a quick TP for you right there. So you can see that would have worked right there. Again, at this point, if you'd done it again, could have worked right there, right? So that's another way of using this tool to improve your ability to trade your specific strategy. Another thing that you can do here as well is you can identify this as liquidity, right? So for example, price comes down, retest it. When price finally comes down a second time right here, you can enter the trade and catch the liquidity push to the downside. So the main reason I use this is for risk management, basically to avoid risky trades or areas that might be manipulated. But for you, you can use this for other ways as well, as I explained here, to identify possible rejection points for entry or identify possible liquidity for entry as well. So that's pretty much it for this indicator here. If you guys have any questions, feel free to reach out. Otherwise, I will see you guys in the next video.